going to be talking about candlestick basics and basics of price action. As usual, anything on this channel is used for educational purposes only and is not financial advice. Should be obvious, but I have to say it. So, starting out with just talking about candlesticks and how they work. So, just this is going to be kind of just a simple video. It shouldn't be too terribly long on it, but just showing you the your green and red candle basics. You have your top wick, which is your obviously your candlestick for that time period high. The low down here on the lower wick, your open, your bullish candlesticks always open at the bottom. You've got your body, and they always close at the top. Your bearish candlesticks are opposite. They will open at the top and simply close at the bottom. So if you look at how, if you want to visually see how, or draw out rather, how these candlesticks play out, generally your bearish candlesticks will open, create the bottom wick, create the high, and then close. Okay, your bearish will do a little something like open, create your top wick, your body and your low, and then your close. That's how you're generally going to look at a normal candlestick. I'm going to go over some patterns that I personally look for. It's not all of the patterns that are out there or types of candlesticks. These are just some of the few that I personally look for. It's nothing that like anytime whenever I'm explaining this, I want this to be very clear. It does, anytime you see one of these candlesticks, it doesn't mean that anytime that one of these patterns or candlesticks appear, it doesn't mean that price is going to reverse. It's just giving you information. It's giving you data. So the first ones I want to talk about are your doji candles or your spinning tops. I love these candles. That's why it's my first one. It's the first I look for when signaling some sort of hesitation in the market or a reversal um, happening. Like I said, normally, your regular candlesticks that you want to look for are going to be your over here, like your big, fat body, not a whole lot of wicking going on. But your um, doji candle or your spinning top is showing that there's a tight range of price movement or confusion in that particular asset or in the market, or buyers and sellers are agreeing on a price for the time being. So on this doji candle or this spinning top could be a period of consolidation on a smaller time frame. Next one I like to look at is your haramis or your inside bar. So what you're going to be looking for on this is, say, like a trend, like a downtrend. This is going to be a bullish harami or inside bar, where you'll see kind of like just pretend this is a big momentum candle, fat momentum candle, momentum, and then boom, you open down here, you move down, but you don't break the low of the candle, and then you flip to a bullish candle. The opposite would be for a bearish. So you would expect, so what you would expect at this point, some sort of reversal is showing momentum is slowing down. So what you would want to see at this point is price to break above, maybe come back down, retest, and then come back up to continue bullish momentum. Opposite for bearish momentum. Okay, good for good to look at. Always want to do a retest, in my opinion, to kind of catch a confirmation that price is going to reverse, to get a greater chance of catching a ride going in that direction you're looking for. Next up, we got our hammer and our inverted hammer. Very simple. It looks like a hammer. That's it. I mean, it's, you're going down, you're in a downtrend. Hammer price was pushing down, or it could have had a quote unquote liquidity sweep, whatever, down to the bottom, and then buyers stepped in and pushed price back up, signaling that buyers have an interest in this area here, pushing price back up. Again, you'd probably want to see something along the lines of pushing up and then coming back down, retesting, and then moving back up again. Okay, inverted hammer, it looks like an upside down hammer. Pretty simple, right? So you would actually see this at the top of an uptrend is where you'd be looking for this at. So normal momentum candle, no normal momentum candle, and then you have the inverted hammer up here at top, and then just like your bullish hammer over here, you would want to see a push down and then a retest up, and then you'd enter going down. Okay. Next up, you've got your, what have I done? You've got your hangman and your shooting star. This is the opposite concept as your hammer and your inverted hammer. So your hangman, you would basically see a hammer at the top of an uptrend. Okay, they call it a hangman because it looks like a man that's getting hanged, I guess, kind of, whatever. It just looks like a hammer at the top of an uptrend instead of at the bottom of a downtrend. Okay, so it's signaling that there's sellers present and they are looking to push price down. It didn't quite have the full bodiedness of a momentum candle, so you'd be looking for some sort of a reversal here. So ideally, you'd probably want to see something along the lines of pushing back down, and then you want to see up retest, and then back down again like this. Okay. Of course, I mean, anytime that I'm using these as an example, it's situational. So I mean, it could look different. It could look like, oh, we went up a little bit more and then we displaced down, and I'll go over what candle would fill in that area going forward. Shooting star, it's an inverted hammer, but at the bottom of a downtrend, signaling that buyers have an interest in pushing price back up. Moving right along. Maribozu candles, simple. They have no top wick, no bottom wick. That means that price moved in one direction. Price literally went like this. Okay, or price went like this. All right, that's a strong candle, bullish or bearish type candle. If you see that candle, especially on a higher time frame, you are incredibly bullish. It would be stupid to try to look for any sort of reversal. And then you've got your engulfing candles. So this is where up here I was saying where you would have something that went like opened up top and then just went straight down and covered the entire candle. That would be your engulfing candle. So you would have in a downtrend, you would have bearish, and then you would have just an absolute, just massive bullish candle here that would engulf this candle in its entirety. Okay, so over here for bearish, you'd have bullish, and then your bearish would be engulfing this candle here, which means that it just completely it just took out all that air, all that work that the bulls did to push price up, and it shows that sellers are present, moving price down. So that's basically it on the types of candles. I'm going to go back and kind of show you and just kind of pick where some of these types of candles appeared. I'm going to go to a higher time frame. So, okay, this is going to be an example. Let me get my highlighter. This is going to be an example of kind of like a doji candle, like right here, where you had a swing high and then you moved down, and then you had this doji candle at the bottom. I'm going to go ahead and remove all my drawings. You had a doji which signals market confusion, or buyers and sellers agreed on price at that particular time, or a period of consolidation on a smaller time frame. So what happened after this? You had price move up, it picked a direction, and before where I was talking about a push up and then a retest of an area, that's what we had here, and then we started to move up once again. So that's where you would enter a long position based upon like a doji candle, or this could even be, if it had a little bit longer of a body, you can consider it as a spinning top or bottom, whatever. Doesn't matter. What you call it. It's what it looks like, what counts, like how you interpret it. Moving on, let's see if we can find anything else. I guess, yeah, here you go. This would be considered a hammer right here, where price went down, and then you had the candle open right here. We pushed down, and all of a sudden, buyers stepped in and flipped this candle green. And what happened? We went up. Okay, and then we had a lot. These are some good examples of some good bodied momentum candles. We didn't have any Maribozus, but we did have just our regular standard plain Jane. What we'd look at is being momentum, which means that we broke the high of the previous. We kind of got into where we went down a little bit, tested the body of the previous candle, and then we broke and closed above the high of the previous candle, signaling continuous bullish movement. Opposite in that would be bearish, where we tested the body of the previous candle, and then we closed below the previous candle, signaling increased bearish movement, which we did. But in this case, that candle closed as a hammer, which signaled as a, hey, we're quite possibly getting ready to move price upward. This right here would be an example of, it's actually a terrible example. Let's look for another one and see if we can find a engulfing. Yeah, here we go. This would be an example of an engulfing candle right here, kind of, where it's signaling that, well, that was a horrible way to that was a horrible circle. This candle right here, you could suggest that it is a bearish engulfing candle, where it just completely took over the body, wick, and everything and closed below it, signaling that price could potentially start moving down. Okay, so moving on. What else? What else? What else? Let's look for a good example of an inside bar. I know that I gave an example in a previous video on using Heikin-Ashi candles, but I want to kind of show one in using traditional Japanese candles. And okay, so here we go, right over here. Just pick and choose. So we had kind of like this, we got this period of consolidation here, but this candle, keep looking for, I changed my favorites, and I keep wanting to go over to my tool bar over here whenever I've got it down at the bottom. So where I've highlighted here, this is would be considered an example of an inside bar. However, it stayed kind of like in this range of consolidation, but as you can see, we kind of did break out of this area, but then we went in the opposite direction. So on a higher time frame, this candle actually did one of these. It went open, created the wick, created the body and the high, and then closed. So what is this? On a higher time frame, this string of candles actually made a doji candle, but we had our inside bar right here, which you would play this. I would probably have gotten stopped out because I like larger moves, but where it actually broke out of this inside bar, I would have played like a short position and caught a move down, but it actually moved back up and it would have stopped me out because I would have placed my stop up here. But this is an example of an inside bar, what you would look for. But you would actually kind of look for one on like the end of a trend, which there really are. Okay, here we go. Here's a better example. My bad. Ignore the past 2 minutes of rambling. So right here we had a downtrend, and then we had a doji, and then an inside bar right here. That looks inappropriate. Right here. And then what happened? We did failed to close below this particular candle's low, had an inside bar, failed to displace higher or lower. So now we can expect some sort of reverse in momentum where we had a bullish candle. We actually went down a little bit and then we started to go up. After this candle, this engulfing is where I would say, hey, now it's time to look for a bullish reversal. And then, of course, we started going up and up and up and up and up and up. And like I said, guys, these are just some examples. I mean, and these candles, you don't want to take them too literally as to like look at it in absolutes, like, oh, anytime I see a hammer, price is going to reverse to bullish. Anytime I see a shooting star, it's going to, or a doji, it's going to, price is going to reverse in this direction or whatnot. That's just not how the market works. It doesn't. It's giving you data to look at and say, hey, this is what might happen in the future. It may not. It's not 100%. So, anyways, guys, just kind of a shorter video of me, talking about the basics of price action and candlestick patterns. If you liked the video, hit like, subscribe, tickle that bell, whatever you want. Anyways, have a good one.